Jeff.
Hey, how you doing?
Hey, how's it going?
Very good, sir. How about yourself?
I'm doing great. So I hope you don't mind being a bit of a guinea pig. I'm actually testing out some new headphones today, see if they work.
Cool.
Because a lot of
Yeah.
times when I'm doing my show, I get feedback from my speakers into my microphone. So I thought I'd try this and see how it works. Do I sound okay?
Sounds great. Yeah.
Okay,
Do you
cool.
have a Do you have a condenser mic as well, or?
Yeah, I have one of these
Nice.
giant blue snowball microphones.
Yeah.
I'm to decide whether should have it in the shot so it looks more like radio-y,
Yeah. That's good.
or leave it out of the shot so it looks less radio-y. I don't know. I haven't decided yet. Let's leave it in the shot for today. How's that?
Go nuts. Yeah, that's pretty cool.
All right. So should we just jump into it?
If you'd like to, yeah.
All right, cool. So why don't you tell us a little bit about yourself and your organization and what you're passionate about, and we'll go from there.
Sure. So I'm the Senior Vice President of Strategic Development at Cornerstone. We've got three very unique and separate organizations that all work as one, and that's the Cornerstone League, which is our trade association for credit unions in Arkansas, Oklahoma, and Texas. And then we've got Cornerstone Foundation, which is our charitable arm that deals a lot with financial capability and well-being for credit union team members, as well as disaster relief. Unfortunately, living where we live, that kind of stuff happens every year, really. So we give quite a few grants after hurricanes and tornadoes, and to help credit unions and their employees get back on their feet. So there's a whole program around that, and of course, giving related to that as well. And then our for-profit wing, which is Cornerstone Resources. So that's a lot of our fee-based consultative type services. It also, we're chiefly responsible for investments and bringing along new companies into the credit union industry to help serve our financial partners.
Very, very cool. Very cool.
Yeah.
So tell me what you're passionate about.
Yeah, that's a great question. So right now, today, I'm passionate about NHL trade deadline. I'm a big hockey fan.
Wait, that's still happening? That's still happening? I'm so disconnected from any kind of professional sports now, because I mean, I used to be a huge hockey fan, right? The Leafs were my team, and they always sucked. And then I asked my Alexa the other day, I said, where are the Leafs? Are the Leafs in the playoffs? And she goes, yeah, the Leafs are in the playoffs. And I'm like, what? There's still playoffs? What's going on? I have no idea.
Yeah, it's been a crazy couple of seasons with the COVID pandemic going on and whatnot, and then of course different guidelines between Canada and the United States on quarantining and that. So it's been very interesting this year with just how they've set up the league and whatnot, and all the rivalries actually kind of fired up. So yeah, we have a bunch of buddies and I have been very passionate about that, but from a professional perspective, certainly passionate.
Wait a minute. Just before we go into that, is it true that they reorganized the conferences and now all of Canada is in the Northern Conference?
Yeah, absolutely.
Exactly
Yep. So we've got the I'm sure it's not the Labatt Blue Conference, but it's the Northern Conference. The Sleeman's Conference, right? And then all the East Coast teams and the Central and the West, and it's been very, very interesting. And I'm originally from Minnesota, so northern Minnesota. I grew up about an hour south of Thunder Bay and Fort Francis and the Ontario border. So
nice.
Yeah, so close cousins. There you go.
Did you ever sneak across the border for anything? Well, there's nothing on Canadian side.
Absolutely. Well, back before passports were required, we actually used to play Fort Francis quite frequently for high school sports.
No way.
And then International Falls was in our conference even. So, and that's just right across the river. Cool. There was one time I ran across the border singing "God Bless America." And they wouldn't let me back into the United States on the other side until I sang "Oh Canada," which I did very well.
I love it.
Yeah, I can't do that anymore, but that was
No. Those were the days. Sorry, I didn't mean to interrupt you, but
no, that's okay. That's yeah. Yeah, so growing up was really, one of the biggest things I experienced growing up. I think this is where I kind of got a lot of the passion from. Is we were a very heavy mining area, right? Lots of iron ore mines and pipelines and lots of trains and shipping and all that kind of stuff. Everything's related to the mining industry and those industries that supported that, and saw a lot of economic booms and busts through that whole process of steel making and selling. And so diversification, specifically in what we bring to our credit union partners, as well as just other industry partners, is really important to me. And then applying that cooperative model to things. So in my humble opinion, I think the cooperative model, the democratization, right, of basically, different businesses can really be applied, and I think it makes it better for the consumer as well as the workers. Volunteer boards instead of paid boards. And I know this might not be even the right audience to pontificate about this, but at the same time, I would earnestly, tell folks in the startup industry to really look into the cooperative industry and how they can utilize cooperatives, if nothing else, just for feedback and that kind of thing. Because the focus isn't always on profit, right? And always on revenue, you can get a lot of great kind of unfettered feedback about what's going on with your business. I just think of, that industry, the cooperative principles, I should say, have been applied to many industries, financial, of course, utilities, specifically with utilities down here. I live in Texas now. We had that massive, for us, massive snowstorm, and then it got all cold and we lost power for about a week. And
that was totally insane. I couldn't believe
it was nuts. But and you hear these horror stories about people who have aligned themselves with for-profit electric companies getting $1,000 electric bills a month and all that kind of stuff. Well, my electric cooperative decided to not pass those increases on to their members. So nice. they deployed their own capital to help save their members, right? So, and I think that's just a quick, little snippet of what cooperatives can really do to help improve what we consider the member owner experience, right? And then also, go ahead.
Sorry.
Yeah.
No, it's interesting you should mention that, because this is like the 4th or 5th time I've had somebody from some type of the cooperative organizational structure on the show, and it always sounds really, really compelling. And I'm wondering why more people don't do it. I mean, what's stopping people other than the profit motive? I guess that's the overriding thing. I mean, what's stopping people from doing more of these things?
I don't think we do a very good job of talking about ourselves, first of all, and that sort of thing. And there's not really a great centralized, they don't teach you necessarily cooperatives a lot in like business school, right? So it's the motive for profit and of course residual income and that kind of thing from being on boards of corporations and that kind of thing. That's a whole other thing, I guess. One of the things that is really, I don't want to say it's taken away from cooperatives. I think it's a great additive kind of a thing for the for-profit side is the B Corp or the benefit corporation, right? So there's a lot of financial
companies like Etsy are doing that right now. Yeah,
absolutely. And then there's a banking group in Minnesota that went to that a few years back, the Sunshine Banks, and they do a lot of really great things with community reinvestment, especially in the business community. So that's, I think there's different ways to go about it. My bias is to the cooperative model, mainly because you get people too that are in it for the right reasons, right? You get the volunteer board members who actually take and use your services rather than maybe somebody from an outside board that's really looking for a payday. So that's just humble opinion, and I know I'm biased, but at the same time, that's something I've even really liked, they've applied it to breweries myself.
Well, you can apply for it to anything, really.
Yeah,
I mean,
absolutely. Housing, all that. Yep. Yeah.
Is there any business model that it can't apply to? It seems to me that there's no reason why we can't have co-ops for everything.
Yeah, absolutely. And so it's just, it takes a a big effort and concern by the users of that product. And then of course, I'd say a great leap of faith from the owner or the business, like the actual business that's doing it, to say, yeah, I might forego some profits here, but I'm going for stability and of course, longevity, rather than just trying to flip it and then go on to the next thing. So that's right. Certainly something I'm passionate about. So
if we were thinking about, let's say I'm a startup founder and I'm thinking, oh, maybe I can think about using this model for what I'm doing. How would I go about doing it? I mean, I would have no idea how to set something like this up. I mean, do you just sort of like write up a bunch of articles and say, hey, we're a co-op, or how does it work?
Yeah, so I'll talk to it specifically from the credit union industry, just because I know that one pretty well. So within the credit union space, there's these things called CUSOs, or credit union supported organizations. So no credit union is really big enough to say do a lot of the things that a Chase or a Wells Fargo or a Citi, like a multinational type bank, is doing. So we band together and we invest in businesses in a cooperative fashion, and then reinvest the profits from that business back into the business, and of course to the users to discount the service fees and that kind of thing. So we do that quite often with fintech type providers who might be looking at, say, the credit union industry as a viable option to deploy their product into that marketplace. And they'll come to us and say, hey, we really want to be in the credit union space. We move quickly as credit unions. There's not the 7-layer cake, generally speaking, of governance and approval and all that kind of thing. And there's a lot of credit unions out there who love to be cutting edge as well. Digital Federal, for example, out of Boston, even has their own incubator for fintech companies and that kind of thing.
Nice.
In partnership with MIT. Yeah. So I mean, they've really done some great progressive things. What we do then is say, for example, and you can put them together however you want, but that CUSO, for example, would be responsible for the deployment of that product or service within the credit union market space. And maybe we take a seat on your board in that particular scenario, if you didn't want to make the whole company into a cooperative. And there's a lot of folks out there that don't, because it certainly, I would say, lessens the return on that investment for them. And I totally get that, because I also work for a for-profit entity, and that's something that you have to be paying attention to, because the board is, that's for sure. So, but ultimately, that's one way that we've helped a bunch of fintech players come into the credit union space with credit union funds to use in, whether it's a seed round or a Series A funding kind of thing. And then they've got the knowledge and the partnerships and the relationships that we would bring from the CUSO side.
So that's an interesting question. You mentioned governance, which I think is like the key thing here. How do you govern when new things are going to happen? I mean, do you need a subset of the members to agree to it, or is there a board, or how does that work?
Yeah, generally speaking, I've found them to work very similar to for-profit entities or corporation boards. The members elect them, just like a shareholder would, right? Right. A lot of times they're volunteer, so they don't have a lot of compensation, maybe a per diem for meetings, or if there's travel costs, that kind of thing will get covered, but there's not, like a salary per se attached to that position. It's not compensated by say the actual earnings of that financial or that company. But then those revenues, that income would be then dispersed back into the system in some way, shape, or form, whether it's to the members as discounted, like we can discount those services that they've purchased into, or so say, for example, there's a a program that is specifically for fraud in call centers, voice authentication software. So every single time somebody calls into the credit union and that authentication software runs, it might be it's less than this, but this, for ease of math, it's a 10-cent charge on that call, right? The credit union, who also might be an investor in that, knows that 3% of that is actually getting rebated to them because they're a member of the cooperative QSO that's been set up. And then the rest of it goes back into the entity to then build capital for the for-profit so that they can make the system better. So there's lots of different ways you can set it up. There's really no limitation, but that's one that's been working really well, because we know that the product is solid, it's supported moving into the future as well. We have a seat at the table as being a shareholder in the for-profit entity, and then our credit unions are happy because they get rebated services.
But it sounds really complicated, though, is it?
Because
you're making me think, oh my God,
is getting like
I want to use this model, but it's so foreign to what I'm used to.
What's complicated is getting a bunch of people to agree that, hey, this is a good idea to do it. So that's
normal.
Yeah. And of course, getting the business owner to agree as well too, that, hey, this is a good way forward. So from that point, I mean, if you've got a good environment where you can then, there's specific law firms that we deal with that are based in that queue. So that's all they do is those kinds of setups. So we work with those folks and they draw up the agreement. So it's, amicable across the board and off we go. So.
And that would work so tell me a little bit about this brewery, because I really want to hear your model that's not financial.
Yeah. So I'm a member actually in Fair State Cooperative, and it's a brewery in Minneapolis. Well, just outside of Minneapolis, but we'll call it Minneapolis for sake of positioning. So when they first started, they started up as a for-profit entity, and they just were having a really difficult time finding funding. So they got together some volunteers to try to figure out, how do we get people to help almost like crowdsource this funding, right? So almost like a GoFundMe for the brewery. And ultimately they landed on, well, why don't we let each person buy a share of the brewery? And that just led itself.
That's allowed? It's not a legal thing, right? Because I mean, prior to what was it? That it was some act that came out a little while back saying, people who, because it used to be you weren't allowed to buy shares of these companies, right? I mean, you had to have a certain amount of money in the bank before they let you buy share. Is this not being right? It's not the same as being an investor?
Yeah, absolutely. So I don't know specifically in if it's different in Minnesota, or if that was just the business, how they decided all of a sudden to go in a not-for-profit status, because that's the other thing. It's not a non-profit, it's a not-for-profit. So still meaning,
so you can still make profits, but it's not the main source of survival. Absolutely. I just want to make beer, man. I want to make beer. I want to drink beer.
That was it. They wanted to make beer. Yep. So, and they were having difficulty getting loans and raising capital and all that kind of stuff. So they changed it into the actual not-for-profit status. And that's where it kind of took off. And they've, I mean, I can't remember the last count, but it's well within like the 250, 300, distribution points within the metro and Minnesota area. So
that's fantastic.
Yeah.
I mean, why not use this model for anything? I mean, if you think about it, it makes a lot of sense. But do you have to start? I mean, it sounds like they had to transition to that because they were having trouble finding funding. But once they transitioned to this, it was a lot easier.
It seemed like it for them. I mean, it was the first one in Minnesota anyway. I know that from a brewery distillery kind of perspective. My understanding of it is that it was pretty easy to go into the not-for-profit status from a corporation and whatnot. It's just that you have to have good governance again from the board perspective, and making sure that you set up a business plan that makes sense. And then of course that with the membership, right, you get discounts on every beer you buy. You get a chance, if they ever do decide to give a dividend back to the shareholder, the member owner, then yeah, you have a chance to make a dividend. But generally, we all vote to reinvest that in the business. So
interesting. So this is not like sort of like your standard, because there used to be that, I guess it was a federal thing where you couldn't invest in companies unless you were an accredited investor and you had to make over $1 million a year or something like that. But this is something different, right? It's sort of like it's using the same kind of credit union
same kind of principle as a credit union, where we at a credit union would treat you like Warren Buffett if you put $5 in a savings account. So that's you essentially have a share of membership in that, or ownership in that credit union, with the $5, if you will. So it's the same idea at the brewery. If you purchased a membership, you have a share of ownership, and you're part of the member owner group, and off you went. So
this is it could be state based, right? So definitely in Minnesota for sure you can do this.
I'm sorry, I don't know all the specifics legally, but I do know some really good lawyers.
Sounds like a great idea, because if you think about all the GoFundMe's and the Kickstarters and all that stuff that's out there, I think it would be really cool if these companies could survive based on the funding of their members, right? Yeah. So it almost seems to me like something, maybe it's a legal thing, maybe a legality thing, maybe it's legal in Minnesota, but elsewhere. I could look into that. But I think it's a really good, viable business model. For almost any startup, right? Because if you think about it, you do need that set of customers. They're going to be buying stuff from you, and you want to stay afloat. If you think about it, not for profit, it doesn't mean you're not going to make money. It means you're still going to make money. You just, it's in the support of the product and the support of your customers. And it's a great collaborative model that I think this is the model for today. And I'm surprised that not more companies are doing this sort of thing.
Same here. And it's a great question to dig into about why they're not. And it's something I'm certainly going to take away from our conversation. So.
Very cool. Well, I'm going to do some research on that, but I want to talk about, you mentioned something in your note about financial technology that enhances culture. And I'm like, what? What exactly does that mean? I'm like, how can you do that? How can you use fintech to enhance culture? I want to hear more.
Yeah. So some of the credit unions that we deal with as well have a great cultural influence in some of the communities they serve, right? So not only are they able to impact their internal culture, right, and at the employee level and whatnot, but it can certainly help, say, communities of new Americans who are coming in, or new Canadians for that matter, really adopt and learn more about the banking system and how to acquire wealth and how to have how a debit card works in this particular part of the world rather than the other one. And so there's all sorts of fintech out there that deal with financial capability and well-being. At many different demographic groups. So whether it's a adult learner, a teenage learner, a child learner, and then also from just the speed and the velocity of transferring money back and forth. That's another thing that there's a lot of fintech type startups, especially here in Texas, working on how do we help folks who are coming here to work transfer money back faster, safer, more in a frictionless manner, especially
crypto,
when it comes
right? No.
Yeah, that's, well, I wish I would have invested in Bitcoin a few months ago. But
I remember I had to convince my wife. I had to convince my wife to buy one when it was worth $300. She goes, it's not going to be worth anything. I said, well, it's $300. If it's gone, it's gone. So, and now I'm like, yes, I should have bought more, but hindsight is 2020, right?
Yeah, absolutely. That's well, certainly, I was going to say certainly the software and the principles behind it, right? The blockchain operations and using that kind of modality to identify and making sure that the money's going to the right place and whatnot. So I think there's just all kinds of opportunities there to help demystify things in a lot of ways, and that's one of the things I meant by having a good cultural impact on how we deal with each other in a financial way, in a transparent and frictionless environment.
So are you talking about, I mean, from a strategy perspective, are you talking about just building apps and things that will allow you to talk to underserved populations, or is it more of is it a higher level strategy than that?
Yeah, so great question. The kind of both, actually, but so there's the financial well-being part of it, but also making sure that you have access to funds when you need them, as well as just a real good line of sight into where the money is in process. So there's ways that businesses can actually deploy payroll systems that feed into banking applications, that feed into the checking account and debit card and that kind of thing, and do that in a very safe and concise manner. Some of my favorite applications of I guess you could say fintech translation of old processes is in the lending realm, where a lot of credit unions have started to adopt micro lending or secured based lending, or just even credit building lending, to help folks get established with some kind of track record, so that they can drive a good credit score and a good credit history through those kinds of things. It's one of those where this is again my humble opinion, I don't think we do a really great job of teaching that kind of thing in schools. And
you mean financial literacy in general?
Yeah, absolutely. Yeah. So specifically in the credit union world, we see a lot of folks coming to us that might have had some damage done, or just don't know how to use proper financial skills in a good way that's going to help build them up in a way that they can acquire more and build wealth that can then be transferable to next generations. And that so realistically, like what we're trying to accomplish with some of the newer fintechs within the credit union space is, how do we graduate folks into different stages of their journey, right? So going from really basic kinds of things like, okay, we'll develop an app, and this one's being worked on right now by a company in Chicago that we've got some investment in, is how do we essentially use AI to learn your budget, right? And learn when you have payments coming in, and when you have money going out to pay bills, and when you have direct deposits and that kind of thing, and the system will actually help coach you through, like, hey, you shouldn't spend that extra $12.50 on Starbucks today, because you're not going to have enough money by the end of the week to pay this bill. So it can do some automated coaching kinds of things that way, to where you can also set up goals and that kind of thing for whether it's investing or building savings for buying a house or car or anything like that. So leveraging some of those kinds of newer tech to help folks on their financial journey.
Very cool. So does that thing can actually detect if you're heading towards a Starbucks and say, hey, stop?
We haven't necessarily put in the geofencing yet, but I'm sure we could. But yeah, it's one of those things where I never thought of that, actually, but that would help me. So I'll, honestly though, one of the bigger things too is just transparency in pricing. So making sure that our members have really good data to make good financial decisions as well. So linking in with different like automated valuation services for when I'm out there looking at buying a home or whatnot. Before you go into that house, you can look up on your credit union's website, well, what are the top 3 AVMs in the industry say this house is actually worth, based on that kind of thing. So it certainly can help our consumers, our members, make better decisions financially.
Yeah, no, I think you're absolutely right. I think there's huge gaps in financial literacy all across the board. I mean, this is stuff that should be taught in school everywhere, and it's just not. And unfortunately, it sort of falls on your behalf to actually do something about it. But a lot of financial institutions, they don't care, right? They're like, oh, you lost your job, come back to me when you have money. Is that part of being a CU, or is that just what you guys do?
Yeah, so from a credit union perspective, I know our folks, well, just even regulatorily speaking, we have some more wiggle and the ability to help folks out from that kind of perspective. But the big thing specifically around we lost the job or just I don't have a traditional job, that's stuff that I think our industry is still really trying to come to grips with. So how do we?
If you don't have a W-2, it doesn't know what to do with you.
Oh my goodness, yeah. And now even I think we're changing 1099 type rules and that kind of thing. So it's really tough for not just credit unions but even large banks to try to figure out, okay, how do we leverage data and not necessarily what you'd call traditional data to lend smarter to folks who might be working in the gig economy. So yeah, that's a really big issue that I don't think we've had a chance to solve yet. So I know we've got some education content coming up on that, and some futurist type speakers doing that. But ultimately,
nice.
Goodness, it's going to take certainly a different eye, a different look at how we do risk analysis, as well as what other types of data can we leverage to not only lend, but lend consistently and fairly.
Yeah, there's probably all sorts of lending you could be doing that you're not doing because people just fall through the filters, right? They say, correct, oh, you don't have, X amount of, or you don't have W-2s for this number of years, or you don't have this amount, or you have this much gig income. Your bank account might be full, but you don't have, income, guaranteed W-2 style income coming in. So, you get people falling through the cracks you could be lending to.
Absolutely. Yeah. So that's, I know, one of the big problems that our industry is going to try to tackle here in the next couple of years.
Awesome. Well, when are we going to get to the point where you actually have your social, it's not a social credit score, but like everything outside of finances? Because I think that's what's the financial services industry is like they always look at financial indicators to determine somebody's credit worthiness, right? When are they going to look outside of financial indicators to indicate those things?
Well, right now, actually, there's a couple there's a couple of fintechs within our industry that are even going back into like sourcing college transcripts to nice. Which hopefully they're not going to go after mine. But I really hope that in trying to figure out, we're working a lot with alternative sources of data, and then we have to, before it's ever deployed, we have to figure out, okay, how can we use this in a fair and consistent manner? Because that's the biggest thing is, and I know right at the heart of credit unions, right, is to advocate for the every man, if you will, the every human. So it's we want to be able to make sure that we're serving our employee groups, our communities in a way that makes sense, and we want to do it fairly and consistently. So there's a lot of groups out there right now looking at the social score, the putting together of a college transcript with your LinkedIn history and all that, all the kind of different stuff that you can bring in, right? Or even just different indicators that we can look at from a credit database. So not just the traditional Fair Isaac, the FICO, right? But looking at what other scores can we put together from some of the data that's already on there, more looking at history rather than just types of credit and all that. So it's an interesting kind of dive into for kind of an old-timey industry, right? I mean, credit unions have been around for almost 100 years now, and that sort of thing. So at least in the United States, I mean, they've been a lot longer elsewhere. I love to see us trying to figure things out for our members in a good, consistent, and fair manner, using really kind of cutting edge stuff. So
fantastic. So when are we going to get to the point where you're going to be able to? So you're saying that right now you can look at non-financial data to determine sort of like not my FICO, but some other credit score that you guys use yourselves to make decisions?
Yeah, so what I don't know of anybody who's currently using this. I want to be sure I say that, because if a regulator sees this, I don't know of anybody who's actually deploying it. I know that there's companies working on it and trying to figure out how do we work with regulators to make sure that it's copacetic as well. But there have been credit unions and other finance companies who have made essentially a member index score, right? So they look at history of membership and what kind of product subset you have and your performance with that particular credit union or finance company, to really kind of balance out you didn't hit this score, but you've been awesome with us, or you've got a great story and we want to help you establish this business because we think it's the perfect thing for our area. But, it might not work in Austin, but it works in Dallas, so there's certainly some organizations that are working on that as well.
Very cool. Okay, so let's think like a futurist time. So it's the year 2031, 10 years in the future. What will your industry be like? What kind of things will we see out of your industry?
Yeah, that's a great question. And reflecting on some of the things that I've heard and been working on as well is I would say, so we're going to have, knock on wood, hopefully. I was promised a jetpack at this point. I'm sure we will have some driverless vehicles, right? Some autonomous vehicles and whatnot.
You can have a strap-on drone package.
There you go. Yeah, that's good. But we'll probably have, because right now auto lending and lending on personal vehicles is kind of what credit unions are known for, right? That's one of their biggest interest generators as well. So we're going to have to figure out what replaces that. And I see us.
Yeah, auto lending is going away, right? I mean,
yeah, well, maybe. I mean, yeah, and you'll be able to push a button and you'll have a car waiting for you right here. That'd be awesome. I even think that's cool. So, but it's going to certainly put a hamper on credit unions, not for profit, also not for losses status, right? So, so we're going to have to figure out ways on how to replace that. And looking at the real estate industry in general, I think there's a long way for us to go, and really working specifically on the whole transaction. So whether that's educating our members on what house to buy and getting them prepared to even get to that point, and then taking them through that mortgage process. No matter where they're coming from, or if they're a freelancer, if they're a business owner, if they're W-2, if we even have them at that point, that kind of thing. And being able to help serve them by using sources of alternative data, as well as a mixture of credit scores and that kind of thing. So I really feel like that's an area for us to really help the consumer out in. And owning a home is a great way to create generational wealth as well. So, so I feel like that's one of the ways where we can kind of differentiate in the next, say, 10, 15 years is really kind of being the league leader in that. Lastly, I think one of the most pivotal things for credit unions to kind of rally around is, how do we make good investments as a system into things that are going to democratize money more, and really help level the playing field when it comes to the wealth gap and that kind of thing, which you might say, well, how do credit unions help there? Well, first of all, it's having access to more AI driven, investment guides and having a better look into how you're budgeting, where your money is going, and then layering on services on top of that to help you unsubscribe from that third Netflix subscription you didn't need, and that kind of thing. So really, instead of retraining everybody, it's kind of a learn as you go and a pick your own adventure kind of book. So if you're going to the woods, turn to page 33. If you're going to the sea, turn to page 50. But you have some, yeah, I know. You have some choices to make, but you do them in an informed, data-driven manner as a consumer, and we were able to bring that level of transparency to our member owners. I think that's really the two big things. And then lastly, we're going to have to, as a not just an industry, I would say, as credit unions, but financials in general, as well as retailers and Amazon and Microsoft, we're going to have to deal with fraud at some point, right? And try to figure out equitable solutions on how to help consumers and protect consumers from fraud. And protect all of our data from that as well too. That is just going to increase every time that we do something. It seems that the fraudster is 2 to 3 steps ahead of us, and we're at some point going to have to solve this as a society, if you will, and make sure that people feel safe even giving us that information so that we can help them with AI, right? So, so that's a big thing where I think we'll be able to, in say 15 years, catch up, as long as there's a concerted effort internationally around how we deal with that.
I hope so. That'd be nice to see. But I like what you're saying with when it comes to sort of going beyond the financial services thing, because so many banks and financial institutions are just like, okay, this is all we do. We work on money. We handle money. And you do your thing and we'll handle the money. And it's like, no, you have to help. You have to help your customers if they're in a situation, right? It's like we were talking about before with those gig workers who've got a lot of money one month and less the next month, and rent's got to be paid. So you've got to figure out some way of sort of leveling things out, or something that goes beyond just being a passive financial institution, something more along the lines of, what do you need? How can I help? Right.
Absolutely. Yeah. And even then, I would say take it one step further of not even needing to ask them what they need, just understanding based on the history and data aggregation of, we know you need this. Here's a suggestion,
Or we know you're going to have a quiet month, so we automatically lent you the however much money you need to cover your rent. So
absolutely,
thank us later.
Yeah, so that predictive, the predictive and almost prescriptive in a way, kind of way of doing business. I think absolutely, I agree with you. That's where we need to get to.
So another thing I want to ask you, so a lot of your members have their own money, but they can't really lend to each other. I mean, have you guys ever thought about anything kind of sort of peer-to-peer lending within the organization, or is that like something that's strictly not allowed due to banking laws or whatever?
Yeah, so there's a lot of regulation around that, and ultimately, that's I get where you're going with that, because I agree. There are some organizations set up like that, like Lending Club, for example, and I think maybe Prosper does something like that as well. So some of the fintech challenger banks, as we like to call them, are in that kind of game. And the way they work it is more of like, hey, give us X, we'll give you Y return, and then we're going to go out and give it to them, which is essentially what credit unions have been doing since the mid 1930s, right? We say, give us $10,000 for 60 months, we'll give you 3% interest rate on a CD, and then we go and turn around and lend that money out for 4% to somebody for a 60-month car loan. So essentially, that's what credit unions do. We don't have alternative sources of capital, really. Yeah. They're kind of.
So you already do peer-to-peer lending.
We're like the original peer-to-peer lenders. Yeah, actually. but ultimately, yeah, you're right. I wish there was a way that we could do that more directly, especially in times of need. So for natural disasters, for example, or massive recessions, which if you, I think, talk to some folks that are going to get more wild. The deeps will be deeper and the highs will be higher and that kind of thing. And but it would be great to have some sort of mechanism for members to lend other members money at a better rate that they could get at the credit union, for example.
Yeah. Like I'd love to be able to go into my account and have a little slider which says, okay, let's slide, like anything below this amount I need to keep in my account, but anything above that amount is you're free to lend to others for, for whatever they need.
That's an excellent idea. That'd be great. Yeah. So that's, I think too, that's where some of the credit unions are really getting into more of the foundation. So the charitable side of things. I know we're not for profit, so we don't necessarily pay income taxes and that kind of thing, and because we're reinvesting in the business. But a lot of the credit unions are turning some of those profits back into their foundations as well, so that they can really help the members out in times of need, like a natural disaster, or a significant economic downturn, or a strike from a union or something like that. So
yeah. Well, there's no such thing as a steady state anymore. So we're just in a constant state of disruption. It's just going to keep on going.
Yes, sir.
It never ends. All right. This has been fantastic. Thanks so much. It's very interesting. So if somebody wants to get in touch with you, what's the best way?
Yeah, feel free to reach out on LinkedIn, Jeff Phillipich, and Phillipich. So okay. Philip with an ICH at the end. And then also never hesitate to reach out to my Cornerstone email address, which is jphillipich@cornerstoneleague.coop.
Okay, so I'll put all this stuff in the show notes, and if somebody will get in touch with you, that's the way to do it. You send me your bio and all that stuff, and I'll get it in there. Well, thanks so much, sir. It was great talking with you.
Yeah.
Talk to you later. Bye.